12th of October 2022. This isn't financial advice. This is just me recording my thoughts online to help improve my trading. So, market's just awful at the moment. Everything's making new lows. But anyway, I want to discuss a stock, and it's called Aehr. So, it recently gave a Buyable Gap Up day. I didn't take that. I'm going to come back to that in a moment, but I just wanted to discuss previous entry points on this chart. And I've never actually traded this stock. To tell you the truth, I wish I had, but anyway. So let's go to the first period. Let's just close that. So you can see here it was basing at sort of $2 to $3 type range for quite an extended period of time, that's plus 6 months. And then I see on this day here had massive volume, biggest volume for ages, and huge jump up in price. So it went plus 21% in that day. So, and that was on the back of earnings numbers that the market clearly loved. So this fits the exact definition of a Buyable Gap Up day for me. What if I was more alert to this? I would have. The best thing to do would be buy the stock on that day. Now, one thing I just want to note here is there is some school of thought. So people say, well, wait for the high of the Buyable Gap Up day to be taken out, because that means that there's no more sort of overhead resistance left. Now, I don't actually agree that all the study that I'm doing at the moment on this doesn't really sort of give that any credit. The stock can go up the next day, then flop. So I haven't found any sort of a statistical advantage in waiting for the next day. In fact, you just find that you're better off just to buy on that day. It's not to say it won't fail. Some do fail, of course. But what can happen in the case of a truly monster stock is you've got to make a decision like on that day. Because you can see on the second day, it went plus 84%. So if I was waiting for that, and especially being an end-of-day trader, I would have just left so much money on the table. Now, this is a very extreme example, but like I say, quite often the really sort of powerful stocks, they won't hang around just for you to wait for the high of the previous Buyable Gap Up day to be taken out to get some sort of safety there. Best just to buy it on the day. Now, what I'm talking about here is specifically, I want to do this with options. So I've got a lot more flexibility that if a stock does sort of flop, which we'll come to in a moment, doesn't mean I get stopped out on the options. They might shrink a lot in value even before coming back. So, but anyway, so a few observations we can make here. See, the first few days there was this phenomenal just momentum burst just coming out of the gate here. Really good stuff. So this often happens. A Buyable Gap Up stock. I'm talking like true market leader, like not some sort of bullshit penny stock. Will quite often have a 10, 15, maybe 30-day, 5-day sort of initial momentum burst before it consolidates or pulls back. So it's becoming clear to me as I do more of this study, you've got to sell some into that momentum sort of strength there. Now, how much or when, every stock's different, unfortunately, but you can see here, you went out stock that went from $3.40 to $8.60 in a matter of days. And imagine options on that. Depending on the implied vol at the time, that could be like a 10xer, just literally in a matter of days. So it makes sense to take some money off the table. In this case, it just followed the textbook really nicely because it did have a pullback, and a pretty decent pullback to $8.60 down to $5. But it sort of rested at the 20-day, let the 20-day moving average, the green one there, caught up just nicely. And that was a great time to be doing a pullback buy. So I want to be selling into strength, how rapidly it sort of stretched away from the moving averages. And if it pulls back, actually look to get back in to the trade. And that would have been the ideal thing. And you can see from here, it just went on just a tear, like from $5 to 27. That's career-making type stuff. So this is all in the context of a much better market, which is 2021. A bit of a different market at the moment, but the M in CAN Slim is the most important, as they say, and market was behind everything here. Great initial buy, sell some into strength, pull back buy. Now, I just want to just pause here. So late September last year, this is when the market was actually looking really quite average. See, the S&P was drifting off. It gave another buyable gap up here. Now, let's say I bought that day. Yes, it did have a meaningful pullback. Now, if I was buying the stock, I very clearly would have been stopped out. Not so much with the options, but October 5th was when the NASDAQ gave me a general buy signal, like a green on my traffic light system. So if I'd bought it there, this with options, I still would have kept them. I would have been hurting big time there, but it actually gave me another buy signal that day here. So it's not to say I would have, but nice upside reversal day on the day before. So anyway, theoretical, I know, but they did give another buy just here. Now you're much further into the chart run here, but again, look, you're talking a stock that's going from $13.70 to just over $27 in the space of what's that? Just a bit over a month. So call it 6 weeks. So another amazing money making opportunity here. So the other point to note is Buyable Gap Up type stocks will often give repeat buy opportunities because it's just so powerful. So what the market liked here, the market's still liking it, the stock's in play, the market was having a pullback, but when things are getting ready to go again, bang, let's go. So more than one opportunity to trade this one. So yeah, really good template, really good for the template, this one. So let's fast forward. Obviously, the market's been just horrific this year. This stock has been dragged down with it. However, let's just call it, well, it's almost exactly flat for the year, albeit with a lot of volatility in between. That's still much better than the general market. Therefore, the relative strength is really strong on this thing. So it actually gave another Buyable Gap Up here, and volume not quite as convincing. And here's an example where if you were waiting for the high of the Buyable Gap Up day to be taken out the next day, you bought it, then the thing only failed anyway. So this is exactly my point. Again, I didn't trade this, but I would have been buying it here. Should have been buying it here. Although I need to say that, see this first time it broke out of this base, clearly no overhead resistance here. It's all blue sky. Different story. You could argue, yeah, it was sort of basing here. It's like a stage one, but rapidly running into a lot of trap buys from back here. So you'd expect more chop, and that's actually what has happened. So these new sort of stage ones after big pullbacks don't seem to be quite as good as just fresh sort of new high type stuff. So, but anyway, as I say, I did trade. It would have been still a great trade. Gone from $11 to 19. Would have had to endure that pullback. I probably wouldn't have bought this because that's to the 10-day. I probably would have been waiting for it to go to the 20. I don't know. Anyway, still would have actually made good money if there were options and just held on there. Again, you see that momentum burst there. Now that recall was the market was looking like it was. You can see it here. Had a really nice rally, so this thing went with it. There were topping signals here, i.e. the number of stocks trading above the 50-day got up to 85.90, which is a really big number. Anyway, so the right thing would have been to do is to be selling into that momentum burst there. Yeah, I would like to think I was anyway, who knows. Anyway, let's fast forward again to today. Well, so a few days ago, new EPS numbers, market liked it, plus 24% on the day. Admittedly, not quite as huge a volume as all things being equal. I probably should have been buying that. I say I didn't. It wasn't on my radar. The market is extremely sketchy at the moment. However, what I am doing is keeping this on my high alert because it might just give me like a nice little pullback here. In fact, it's getting very close to it. If I have like a bit of a shakeout, some sort of upside reversal, and/or the market gives me more of a green signal to go, I'm going to try and buy this one. So The only downside with here is the options are expensive, so the implied volatility is really quite high. So to give you an example, so the stock's currently $15.75. Sorry, $15.75. $17.50 calls that expire in December are going to cost about $1.80. So that's pretty expensive. That's an implied volatility of about 90%. So to put that into context, for me to make, say, 4x in those options, I'm going to need, so to get the option to $8.70, that means the stock's going to need to go from $15.70 to $26. That's a big move. But saying that, to be fair, it's done those sorts of moves previously, done way that sort of move back here. So this is a stock that can move and knows how to move. So some sort of follow through day or green signal in the market, this is definitely high on my list. It's a very high beta stock. So I think the implied volatility is deserved on this one. And like I say, if I allocate whatever amount I allocated my capital to the options trade that I'm happy to lose, then I just live and die by the sword on that. So, if it's a 0.5% trade, I'm going to say, right, I'm happy to lose 0.5%, but potentially make 4 or 5x. That's a pretty good trade. Anyway, this one's high on my list. Also, a very good sort of historical example for buyable gap ups and potential spots to trade them.